Good morning. It's Tuesday, the 23rd of January here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, the UK and US launch fresh strikes on Houthi targets in Yemen as attacks on Red Sea shipping continue.
China looks to stabilise its slumping stock market with up to $278 billion.
And Moody's finds red flags in the suspiciously old age of thousands of company directors, with one listed as being 942 years old.
Let's start with a roundup of our top stories.
The US and UK have launched new airstrikes on Houthi targets in Yemen. It's the eighth and most significant wave of attacks so far in efforts to stop the militant group from disrupting commercial shipping in the Red Sea. 2 days ago, US Deputy National Security Advisor John Feiner said the strikes were aiming for weapons stockpiles.
But the purposes here go well beyond deterrence. We are also seeking to degrade the Houthis' ability to continue launching these attacks. They have stockpiles of advanced weapons provided to them in many cases, or enabled to them in many cases, by Iran, and we are taking out these stockpiles.
Two senior US officials told Bloomberg these latest strikes significantly reduce the Houthis' ability to attack ships.
Staying in the Middle East, Israel's ground forces have advanced deeper into southern Gaza with intense fighting near humanitarian zones. The offensive comes as the country faces international pressure and a court case accusing it of genocide. The EU's foreign policy chief, Josep Borrell, is pushing for a two-state solution.
I think the more death, more destruction, more hardship for the Gaza people, for the Palestinian people, will not help to defeat Hamas or its ideology. It will not bring more security to Israel, on the contrary. And that's why we need to double our efforts with international partners to move from this deadly confrontation towards a solution.
Josep Borrell represents European states who are increasingly frustrated with Israel's rejection of a Palestinian state.
Chinese authorities are considering measures to stabilise their slumping stock market. According to people familiar with the matter, policymakers are trying to mobilise the equivalent of $278 billion, mainly from the offshore accounts of Chinese state-owned enterprises. The money is then intended to become part of a stabilisation fund to buy shares onshore through the Hong Kong exchange link. Goldman Sachs China economist Hui Shan says stock market underperformance could harm the economy.
A lot of people ask us about the wealth effect, right? If individuals are holding stocks, their stock value decline, it's going to hurt consumption. But in China, we have found that the wealth effect is not that big. The main effect on consumption is income. Yeah. People need to have income to consume. So what we do worry about is the sentiment and confidence impact, kind of reinforcing market going down, reinforcing the bearish sentiment. I think that might be a bigger channel in terms of affecting growth.
Now, Hui Shan from Goldman Sachs was speaking as some policy measures could come as soon as this week as officials continue to weigh options. A sell-off that sent the benchmark CSI 300 index to a 5-year low this week is increasing pressure on policymakers to act.
The Bank of Japan is keeping its negative rate for the time being. Policymakers maintained the bank's negative 0.1% short-term rate and kept yield curve control parameters intact after a 2-day meeting. Fidelity International's Asia economist Pei-Kwan Liu says that future policy changes will be dependent on a number of factors.
I think the BoJ might start its policy normalization in the April meeting. 3 things needs to happen for us to say more confidently that April will be the month that they start on policy normalization. Firstly, we need to see more evidence on wage growth. Secondly, there will be a Tankan survey that's being released in early April, which will give us some evidence to see the corporate behavior and corporate expectations of inflation. And lastly, between now and April meeting, nothing significant is happening on the political front domestically to derail the path of Japan's cyclical recovery.
Liu's comments are consistent with economists surveyed by Bloomberg, who also think that an end to negative rates is most likely to come in the spring, following the decision the yen initially weakened against the US dollar before retracing losses.
Bill Gross, the man once dubbed the bond king, has some advice for the Fed. Stop winding down your balance sheet and start cutting rates if you want to avoid a recession. Speaking to Bloomberg, the co-founder and former chief investment officer of PIMCO had this message for policymakers at the central bank.
I would stop quantitative tightening. I think that's just not a correct philosophy and policy at this point in time to continue to tighten quantitatively. They should leave the reserve balance around $7 trillion and just see what happens going forward. I also think that, yes, the Fed should lower interest rates over the next 6 to 12 months. Real interest rates are simply too high. The 10-year real interest rate is 1.8%, which historically is very restrictive.
Bill Gross's comments come as Wall Street remains keenly focused on when exactly the Fed will start trimming the benchmark interest rate. Last month, policymakers projected 75 basis points of cuts in 2024, according to their median forecast.
The hack on the Securities and Exchange Commission's X account, which prematurely announced the approval of a spot Bitcoin ETF, was achieved by hijacking a staff member's phone. In its most detailed statement yet on the ongoing probe into the incident, the SEC said that an employee's phone was targeted in a so-called SIM swap attack. This involves a scammer convincing the telecom carrier to transfer the phone number to a SIM card that they control. The regulator says it has now enabled multi-factor authentication on all its social media accounts.
Moody's Analytics has found 21 million red flags for financial crime, and Britain is one of the worst offenders. With $1.6 trillion laundered annually, the ratings firm examined close to 500 million companies in November for warning signs. Bloomberg's James Woolcock has more.
The retirement age keeps getting older, but for Moody's, a listed director that's more than 123 years old is a step too far. In fact, one listed director at 942 years old would have been born in the 11th century. More than 2,200 companies have directors older than any recorded human. It's all part of a report by Moody's looking into shell companies used for financial crime. Other common tells include dormancy, circular ownership, or dubious addresses, with more than 2,000 entities being located in Egypt's pyramids. But for the UK, the report raises troubling questions, with nearly a quarter of all red flags globally being found in Britain's registers. In London, James Woolcock, Bloomberg Radio.
Now, in a moment, we'll bring you on more on the latest moves in the Chinese stock markets. But first, a Bloomberg headline that caught my eye this morning. No frills flying emerges as air travel's painful greener future. So this is a look at the carbon impact from flying that's lesser on low-cost carriers because they're very fixed on reducing the weight by using lighter seats and having more passengers on each flight versus those business class seats that are heavier, take up more room, means you don't get as many passengers, which means their individual carbon emissions per kilometre travelled are much higher. So these are rankings coming from a company called Invest Global, and they found that the 5 airlines that emit the least or the fewest pollutants per passenger are all low-cost carriers. So just for one example, the least polluting on their rankings is Wizz Air, which is almost half of the emissions that you'd see from British Airways, for example.
Well, I was quite surprised by that because in some senses you might think that the low-cost carriers would burn more fuel because they're going short distances and burning a lot of fuel as they go up and come down again. But actually, it's not quite true because it's all to do with the weight of it. Hence why it's called travel's painful future, because it's cramming all of us onto smaller planes. Having said that, no train alternative.
No, I mean,
flies, is that it?
I did have a quick look at what Eurostar's grams of carbon per kilometre are, 5.5 versus the lowest ranking airline, which is about 55. So, I mean, it's a pretty big difference, and probably not flying at all would be much better for the environment, or at least flying an awful lot less than we currently do.
OK, that's one story in the Bloomberg terminal to have a read of this morning. Beijing is considering state intervention to stabilise a stock market rout. According to people familiar with the matter, policymakers are looking to mobilise the equivalent of $278 billion to buy shares onshore and restore investor confidence. Joining us now to discuss is Bloomberg opinion columnist Daniel Moss. Daniel, thanks for being with us. Just tell us about exactly what this plan is and why policymakers are attempting to buy stocks now.
Well, according to people familiar with the matter who spoke to our colleagues at Bloomberg News, the authorities are considering a package of measures, the most important characteristic of which is State or state-backed funds will bring money home to China and buy Chinese stocks. So when you talk about a government rescue of the stock market on the basis of what we're seeing here, that is literally what it is. State capitalism. Beautiful.
Will it work short term? Is there enough money behind it? And does the strategy look like it will shore up the markets that they aim to?
In the short term, rescue packages like this, whether it's China or what we saw from other East Asian countries during the financial crisis of the late 90s and again in 2007 to 2009, yes, there will be a short-term effect. The other thing to consider is investors who wish to have cordial relations with the government will see what the state-linked funds are doing and they'll say, yeah, I better get a piece of that too. So in the short term, yes, it will work. But the really interesting point is like, what's underneath this? Why is this needed? The fundamental problem for China right now is that the economic recovery since the dismantling of COVID-0 has been so underwhelming relative to expectations that we are seeing a shift in the way people now think about China. All the problems, challenges that had been building up for the better part of a decade, but people didn't really seem to pay that much attention to because, hey, there was great growth. These things are now very much in the foreground. People are looking for reasons to be negative on China. There is a bull market for bad news in China. On a more proximate basis, the GDP numbers we saw released last week. Sure, China met its growth target of about 5%, but 24 hours hadn't gone past, and people are taking apart the component numbers and saying, wait, this does not add up. Perhaps growth was as little as 1% or 2%, a far cry from 5%. So we're in a moment where it's kind of like Japan, after the 1990s. No one wanted to hear anything good about it.
Really interesting, Daniel. Thank you so much for being with us this morning. Bloomberg opinion columnist Daniel Moss then on that plan by Chinese authorities, a package of measures to stabilise the slumping stock market. Now to Israel, though, where a profound change has happened since the October 7th Hamas attack and the ensuing invasion of Gaza. Now it appears Israel is committed to a war in Gaza at all costs, seeing an existential threat to the nation. This is what Bloomberg's Israel bureau chief Ethan Bronner has been writing about this morning, and he joins us now. Ethan, thanks for being with us. You've been writing about how Israel has been unusually, incredibly united in seeing and perceiving this existential threat, a consensus, therefore, about the war, despite Palestinian deaths.
Yes, that's right. I mean, I wrote it because it seemed to me that abroad people didn't understand, because they were understandably watching all the deaths and suffering in Gaza and figuring, given the sort of asymmetric nature of this conflict, that Israel is sort of strong and sort of out there feeling strong about itself. But in fact, inside this country, what you feel is an enormous sense of vulnerability and a sense that these militias like Hamas and Hezbollah on its borders, fed and trained by Iran, are actually a deep threat. And that's what has created this sense of unity and this sense of vulnerability.
How is that vulnerability manifesting itself in people's lives? Is it simply the security situation, or is there an economic aspect to it as well?
Both things are true. I begin the piece with several sort of cultural examples, that there's what people are listening to and reading and watching has become much more focused on suffering and vulnerability. So that's one thing. But indeed, I mean, from the first day, several 100,000 reservists were called to the fronts, both the North and the South. And that meant a lot of companies had to stop. Palestinian workers, up to 200,000 of them, are not in the country now because of this sense of fear. And so construction sites where they mostly work are shut down. So the fourth quarter of 2023 is projected to drop 19% in terms of GDP. And, there'll be an ongoing cost. And so far, everyone understands that a strong economy is important, but fundamentally, they are united on the importance of continuing to fight.
Israel also rethinking international relations because of the global reaction to the Hamas attack. Is this a bunker mentality?
Well, on some level it is. Absolutely. This country feels that the world has not fully understood what it went through and what it faces. And the sense internally, and one point I make in the piece as well, is that these things can shift, but so far they haven't fundamentally. But internally, the feeling is if we need to go it alone, we will.
Is there, what acknowledgement is there, though, of the sentiment that's being expressed in many other parts of the world that, the loss of life in Gaza is huge? And what's the perception of that within Israel?
So this is a very good question, and the answer is that there's not much attention being paid to it here. It doesn't get much focus in the media, and some people will say, "Look, it's terrible, but it's the fault of Hamas because they have ingrained themselves into the civilian population, and for us to take apart their war machine, this is what happens." But the sort of public assertion is this is terrible, we aren't happy about it, but it's not going to make a difference in how we proceed.
Talking about the conflict within the region, more US and UK airstrikes against Houthi targets in Yemen. This is now the 8th strike on Monday in 12 days. So this is another flashpoint in the region, but it doesn't seem to be having a huge effect in terms of Red Sea transit at the moment. How are you thinking about what's going on with Yemen and the Houthis?
Well, I think that it could well, though. I mean, one of the reasons you see the US and UK so quick to be attacking Houthi sites is because the concern of seafaring is enormous, and people are having to go around Africa and so on and start switching to trucks. So I think that this is a very big deal and could turn, of course, into something bigger because the Houthis, like Hamas and Hezbollah, are, of course, trained by and funded by Iran. So all of this has a big regional component, and I think that the region has not been this tense in many years. There's in many ways anything could sort of blow, and that's of concern to the entire world, not just to those who live here.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.